I'm Scott Sterrett with Sterrett Wealth Management at Canaccord Genuity Wealth Management. Obviously it's December, obviously because of the hat I'm wearing it's Christmas. So I wanted to touch base with everyone, predominantly to wish everyone a Merry Christmas to them and their families. And definitely been a tough year for a lot of people in 2020. And we definitely at Sterrett Wealth Management hope you have an awesome 2021. But first, let's talk a little bit about the market. What can I say? You know, it's a repeat of what's been going on for the last few months. The market continues to go higher. The market going higher is primarily driven by the hope of the vaccines becoming widely distributed, you know, in the first bit of 2021. And as well, quite honestly, the amount of liquidity, the amount of cash that's in the system. I just pulled an interesting stat from Tony Dwyer's last update. Tony's the chief strategist from Canaccord. So the Fed had an announcement this week, as all the central banks, honestly, in the world do, although the Fed is the largest. And they basically said that they're expecting to keep what they're calling their ZIRP, because of course we all have to have acronyms, zero interest rate policy at zero. Or keep it in place, I guess, zero, until well into 2023. So we basically have 2 more years of zero interest rates is what they're expecting. On top of that, and just to add interest to it, the Fed came out and they plan on crossing over the $27 trillion mark that the US is in debt sometime in 2021. And that doesn't include any of the stimulus to come that could come as early as this next week on Christmas Eve. So, you know, when you think about it, it's just crazy. I mean, $27 trillion, how can the US pay for that? But obviously the market keeps on going higher. The market's not paying attention to that right now. Interesting though, with that $27 trillion, which by the way is up about 18% in the last year alone, the amount of US debt, but their interest costs, so the amount of money that they pay to service that debt, has dropped by 40%. So, you know, the argument is, and we hear the argument here in Canada as well, is, well, our interest costs are much lower, therefore we can handle the amount of debt that we have, the amount of money printing that we're doing. We all know, we've all, you know, been young before and maybe spent a little bit too much money, you know, maybe on our credit card. And we know that no matter how low the interest rate is, eventually you have to pay it off. And as the interest rates go up, the amount of interest that you're going to pay goes up. I mean, a lot of clients I have, remember the 1982 peak when they were paying 16, 17, 18% on their mortgages. I'm not saying we're going to get there anytime soon, but the point is even a 1% increase in interest rates from 0 to 1% is going to make an impact. As far as our portfolios go, they're great. We made a recent change here in the last couple of months, moving out of some of the funds that are predominantly Canada into funds that are more focused on the larger cap international. That's turned out to be great. A lot of those mandates continue to go higher. There are people that in the last month are up 10% in those particular funds, not the whole portfolio, but in those particular funds. And so when we look at that, you know, we just feel that Canada, although it's strong, it's really just energy, mining, and banks. And so having a more global feel to it in the portfolios is much better. So really very happy with that. Some of our winners for the year, I recently did an interview with Sean at HGC. It's on my on the website or YouTube channel or wherever you see these types of things. And you'll see that, you know, they've continued to execute. I think they were up 6% in November, and they're looking to have an incredible December again. Very, very, that's not very common for them. You know, they should be up 7 to 9% a year, not 24 like they're up this year. So overall, we're like I said, quite happy with how the year's ending, especially considering what March looked like. Just to end it off, like I said, we're very grateful to have you as our clients, and both Hangi, Jim, and Angela and I are very much hoping that you have an awesome Christmas. There have been a lot of families in a lot of situations this year where a lot of people are hurting. And we made a decision as a team that we were going to support Women in Need Society, WINS. And so what we decided to do with WINS is, if you're unfamiliar, look on their website. It's amazing. They do a lot of good work in helping women who are in spousal abuse situations or not very good situations for them and their kids to get a fresh start and to get out of that situation. And as you can imagine, in the pandemic, that's been more and more difficult. So we've chosen to buy a house full of furniture for a family as they've relocated. So, children bedroom sets, mom's bedroom sets, dishes, everything you need, I guess, to start a new life. So again, we're very grateful for you, and we're very grateful in the situation we're in living in Calgary and Canada. As always, feel free to send this to friends, family, if you wish. As well, we're more than happy to talk to obviously yourselves, but if you have any friends or family that maybe didn't have a great year from an investment point of view and do want to sit down and get a second opinion on their investments, we're more than happy to help. Just reach out to Jim and myself to schedule a time to chat.